Good afternoon, everyone. We are inside China business. Conventional wisdom says that China, along with other foreign governments, are selling US Treasury debt. And if true, this is going to be a big problem for us if foreign buyers are leaving the market. Here is a headline from the Wall Street Journal from November. When we look into the numbers, though, the conclusion is actually pretty different. First is that US Treasury debt is going up now at the fastest pace in history, in the history of the world. We're borrowing $1 trillion in new spending every 100 days. So it's true on a percentage basis that foreign lending is not keeping up with our borrowing. So that's a big part of the drop right there, from the 43% to 30%. But let's look at what China is doing in particular, because things get interesting there. Despite the headlines about Chinese selling treasury bonds, it's not really happening. The Chinese are doing two things very differently than before. The first thing is that they are moving away from US custodians and moving the money instead to European custodians. They began this shift back in 2015. This is, in retrospect, much more clever than we thought, than things seemed back then. Suppose you're a foreign investor and you're buying a liquid asset. I'm not talking here about like an apartment building or a hotel. Not real property. Something that is traded on an exchange that can be sold by pressing a button on a trading screen. So you're a foreign investor, Chinese foreign investor, and you're buying a liquid asset like a US Treasury bond. Let's also say you have a bank in New York and a bank in Europe. Either one of them can handle this trade for you, and also the custody. Custody means, where does the bond sit collecting interest for you until you decide to sell it? If you have a New York bank execute the trade and service a custodian, it's now sitting at a reserve account in a bank in New York. If you have the European bank settle the trade and serve as custodian, it's sitting in a reserve account in Europe. Now, usually nobody thinks about this very much, but lately everybody's thinking about it. Russian banking reserves were frozen in the US, and they may simply be taken. We don't really know. In Europe, they're not sure what they're going to do with the Russian reserves there either. But moving custody from the US to Europe, China has diversified away a lot of political risk that they might have in the future. That's the first thing, that the Chinese are changing custodians. Chinese holdings of US Treasuries in US banks are going down, but in Europe they're actually going up. It takes a lot of work to figure out where all the Chinese money actually is. Chinese banking operations are a state secret. One of the reasons they may prefer dealing with the Europeans is that European third parties report their data privately, which suits China just fine. SAFE is the state administrator for foreign exchange in China. They have a lot of investments through hedge funds and private equity firms, and they also report all the data privately. They don't publish anything about what their individual clients have. So that's the first thing, the custody change that the Chinese have made. The second part is even more interesting. China is buying far fewer US Treasury bonds, but buying a lot more US agency bonds. Agency bonds are issued by US government-sponsored enterprises, or GSEs. Here is a list of the biggest ones. The two main ones by volume are called Fannie Mae and Freddie Mac. That's the Federal National Mortgage Association and the Federal Home Loan Mortgage Association. In normal times, in good times, Fannie Mae lends money to home buyers, usually first-time home buyers. The down payments required for these loans are usually much smaller than if the borrower had to go to commercial banks. So these loans are considered more risky because there's less equity at risk from the borrower. So Fannie Mae makes thousands of these loans every day across the country. Then Fannie Mae takes thousands of these loans, bundles them together, and sells them as bonds to investors. There is an implicit guarantee that the US government will guarantee these bonds. So that's how things work in good times for most borrowers. But there are always some home buyers who do default on that mortgage. So in that case, the house is sold to satisfy the debt. The government will still make up the difference if there's a loss in principal value, but that can still take a little bit of time. Back in 2008, were not good times, they were not normal times. Many home buyers were defaulting on their mortgages. The value of their homes were falling very fast, and they decided it was a waste of money to continue paying the mortgage. The mortgage was higher than the value of their homes were at the time, so they just walked away. Millions of homeowners did just that. So the government had to come in and bail out Fannie Mae and Freddie Mac. So that's what agency bonds are. And instead of buying mainly Treasury bonds, the Chinese have switched to buying a lot of these instead. And instead of buying them in American banks, they're buying them from European banks. This is a chart of the China US dollar reserves. And you see the total reserves is the red line. This is the total US dollar reserves owned by China. Now these are the best estimates we have because the Chinese don't tell us much, and a lot of it is in Europe, and they don't do a lot of talking either. But after a long lag, it is possible to get pretty good estimates on where most of the money is. And as we see, it hasn't really changed that much from 2015. The high was over $4 trillion. That was in 2013. It dropped to $3 trillion by 2016. So the difference there is $1 trillion. By the way, that is also what China invested in their Belt and Road Initiative, $1 trillion. So a good question to ask here is, if China is buying all these US agency bonds, what does that mean for them on a risk-reward basis? On the reward side, the yields are higher. The yields are a lot higher, especially over time, buying an agency bond versus a Treasury bond. It's not quite the same as buying US Treasury because there is a pass-through. These are called pass-through bonds. And the pass-through payments don't happen if borrowers default on their mortgages. So the interest rates on these bonds are higher than if the Chinese were to buy just regular treasuries. So the Chinese are making more money on the yields than they would be otherwise. But on the risk side of this question, there is something really weird going on. The Federal Reserve is pushing up interest rates fast. We have a serious inflation problem in the United States, so the Fed is aggressively hiking, raising borrowing rates. And this is pushing up the value of US dollars held in reserve accounts overseas, by the way. But this raise in interest rates is supposed to bring down home prices. That's the point of raising them, or one of the points. They need housing values to fall to make renting more affordable. A lot of the inflation that we're seeing in the United States comes from the housing sector and on rents. But housing prices have not really fallen. They're even going up in many places. This isn't supposed to happen, and because new loans are much more expensive to get, because the new mortgage rates are much higher, homeowners aren't defaulting. The default rate on mortgages is basically at an all-time low right now. And I'll say again, this is not supposed to be happening. The opposite's supposed to be happening. It's never happened before that a significant rise in interest rates did not lead to housing price corrections and increases in mortgage defaults. But it is what's happening. I've been living and working in China for over 12 years. And China's got a lot of problems. They're a major country. I'm not blind to them. I see them sometimes. And there are a lot of other channels that are devoted to stuff like that. Our background is business and finance, investment, supply chain. That's my education, my work experience for 35 years or so. When we observe what the Chinese have done, they're either exceptionally smart or exceptionally lucky. And here's what I mean in the context of this. If I were given investment advice to them to manage their dollar reserves, I would have done exactly the same things they did if I had perfect foreknowledge back in 2015 of what the next 10 years would look like. Or said another way, if I could go back in time to 2015 and tell them how to manage these investments, this is what I would have done too. If I knew that foreign reserves could be seized for political reasons, for any reason, we would move it from New York to Luxembourg or to Belgium. If I knew that the Fed would raise interest rates, that means that the dollar reserves would be more valuable, not less, and we wouldn't be selling dollar bonds. If I knew that these rate hikes would not lead to home price corrections and mortgage defaults, I would tell them to buy government agency bonds, the GSEs, the housing bonds, instead of leaving them as Treasury investments. But it was impossible to predict any of those things back in 2015, which is when China started moving their money around from New York to Europe and from treasuries to agency paper. So lucky, I guess. Maybe it was just de-risking or diversification, but everything worked out much better than it should have. Consider something else here. Suppose the relationship between the United States and China just spirals completely out of control, and US politicians decide that the Chinese shouldn't be paid interest on their lending to us, theoretically. Or suppose the housing market does crash and new bailouts are needed in Fannie Mae or Freddie, and politicians say these bailouts should not go to foreign investors or Chinese investors. By having their investments held in street name in Europe, that idea can't work. It's impossible to segregate which investors are Japanese or German or Japanese or UK or French investors or American. By putting these funds into European custody, that political risk goes almost completely away. There is a major caveat here, which is that the Chinese seem to be the only foreign entity that buys our agency paper, our housing bonds. They account for almost all the overseas demand for them. So I guess it's theoretically doable for housing bonds, but on normal treasury paper, normal treasury debts, it's impossible. The Chinese are going to get paid. No matter how bad things theoretically get, they're going to get their interest and principal payments. Here's the lesson then. We need to dig deep into the numbers to go past the headlines if we really want to understand what's going on. If we adjust for the Belt and Road Initiative investments from 2013 to 2015, the Chinese haven't sold any of their US dollar bonds at all. They've just moved them to Europe where we can't see it. And instead of buying bonds directly from the US government, they're buying housing agency bonds instead. And because those buys are also custodied in Europe, we don't see them either. Okay, so I'll share now some of the actual data on the following pages. And if you thought this video has been boring so far, The next 5 minutes are about to get a lot worse. Enjoy the weekend. Thank you. Be good.